People need to get out of the Wall Street rat race and really start taking charge of their financial futures, because I see hard times coming. I hope to God I'm wrong, but I see hard times coming, and I see so many people are going to get hurt because they've bought into this lie that investing in Wall Street is the way to financial freedom.
Are you ready to take the next step in your multifamily investing career? The time has never been better than now. Think Multifamily's Deal Analysis Workshop is a comprehensive live training course that will help increase your skills, knowledge, confidence as an investor before you invest. This workshop is a unique experience that provides hands-on instruction and guidance directly from Mark Kinney, who has completed over 100 multifamily syndications valued at over $1 billion. This course goes beyond theory, as you will be presented with real case studies and practice scenarios to work out in class. By the end of the training, you will have significantly improved your ability to evaluate deals quickly, make informed decisions, and take your investing skills to the next level with confidence. For more information and to register for Think Multifamily's Deal Analysis Workshop, go to thinkmultifamily.com/DAW. Use code Whitney100 to save $100. The Deal Analysis Workshop is designed for both beginner and experienced investors. Whether you are looking for a foundational understanding of how to analyze multifamily investments or looking for fresh insight on how to pivot your analysis method for this current market cycle, this is a workshop you have been looking for. Register today at thinkmultifamily.com/DAW. Use code Whitney100 to save $100. Honored to have guys on and gals who have expertise in so many different parts of our business. And today our guest has just that. I mean, from broker, property manager, 30 years, career author, educator, mentor, coach, and attorney. Man, just grateful to have John on the show. Welcome.
Thank you very much. You humble me.
Well, grateful to have you on, John, and know that our listeners are going to learn a lot from you today. And let's jump right in. Who is John? You can do a lot better at telling the listeners a little more about who you are and how you got to where you're at right now than I can.
Who is John? Well, currently I own a property management company. I've been in the real estate space for 33 years, I think, over 30. That I know. I'm 60 years old. I've been around a long time. I'm an author. I do a little bit of speaking. I do some real estate investing myself, of course. I've brokered hundreds and hundreds of properties over the years. I'm involved with various charities, and that's what I do.
Awesome. Where did the attorney piece come in?
I started my real estate journey in 1989, and I decided in 1997, if anyone's fact checking, I may be off a year or two, and some of the things I say, they're distant, but you get it. 97, I decided to go to law school, not to become a lawyer to get a job, but because I wanted to learn the law. So I went to law school. I graduated from Northwestern University in Chicago, School of Law, sat for the Illinois bar, passed the bar, and I keep it active. I don't know why it cost me $400 a year, but I'm an active attorney in Illinois. I've never practiced law a day in my life. I jumped right back into the real estate space after I graduated law school. I also have a master's degree in international real estate from Florida International University. My undergraduate is in economics. So the world I play in is real estate, and I'm interested in finance and economics, which of course inevitably leads you into the political sphere, and all of that stuff interests me.
That's awesome. Well, I love just the desire for learning, right? Even to the point of going back to law school. Not just everybody will do that, right? Just to gain that knowledge and expertise like you have. So I just hats off to you for going to that depth of learning. And we were talking about before we started recording too, just how many books are reading a year and some of that. I just, that drive to read, right? And even your drive to write as well. We'll talk about a little bit today. But, you recently wrote a book about strategic planning and investing for individuals, right? And so I want to dive into parts of that and define investing, as you see it.
Investing, as I see it, is something that pays you to own it. So it isn't buying a piece of stock, a piece of paper, an undifferentiated share in a mega global corporation that doesn't know you, doesn't care about you, and you might make some money, probably aren't going to make any dividends, most stocks. It might go up in value. It's probably going to lose value in the near-term future. So to me, that's not investing. What your employer tells you to do with the 401k, to me, is not really investing. And that's unfortunate because most people get suckered into thinking that that's investing. As a matter of fact, Whitney, it's been my experience, if you deep dive into what most people are investing in, they're speculating.
Yeah.
Many people don't own a single investment. Their entire portfolio is a speculation. And that's scary. And that's primary reason why I wrote the book, was to teach people what investing really is, the mindset it takes, the team that you need to build. It's not a lone wolf endeavor. And the different things you can invest in. Real estate syndications, but syndications is just a form of pooling together funds to do whatever. Real estate, businesses, most motion pictures are syndications. People don't realize that. So limited partnership investments. Buy a share of Exxon and tell me you're a partner with Exxon. Tell me you're going to call Exxon and they're going to have a conversation with you about your concerns and such.
Not unless you got $1 billion or so to invest, probably.
Yeah, if you got $1 billion, if you're BlackRock, Exxon will listen to you.
Right.
Exxon will not listen to me. And they don't care what I think about what they do. My general partner in my limited partnerships does care what I think. It's a difference.
Yeah, no, that's incredible. I love that. Just the definition that you give to investing, I think it makes a ton of sense. And it should make sense, right? Love that. Buying something that pays you to own it. And it seems simple, right? But I think it's like you said, that 401k, we did listen to the HR lady and just kind of put it in there and forget it, right? We just assume that it's going to grow, right? Instead of often.
Why do we assume that? Because MSNBC told us to assume that. If you think it through, you have pieces of paper, you have an account. You don't own anything. You have an account. But what do you own? If you have real estate, you own something. If you have gold and silver, you own something. If you have businesses or shares of businesses, meaning partnership shares in businesses, you own something. You have royalties. You own something. You're going to the casino when you go to Wall Street. And that just scares the dickens out of me that most people are playing the casino with their life savings.
Yeah. Yeah. It's speculation, right? Speak to speculation versus investing.
Speculation is literally gambling. You put your money on the table and hope you win something back. You could crap out. You could lose everything. Think of the folks that owned a company called Enron. Does anyone remember the name Enron? They were Wall Street darling, high flyer. They went to zero. That is possible, not likely, but possible with every single Wall Street investment that you have. Now, quite frankly, that's possible with every limited partnership investment you have. But the difference is you get to vet. You get to know the people that you're investing with. You get to look at their track record. They're responsive to their investors because their investors are the lifeblood of their business. Once the initial public offering is out, the company has their money. What happens on the secondary market, people trading shares back and forth, isn't putting money into the coffers of that company. They really don't care about you. They certainly don't care if you lose your $500,000 nest egg. It doesn't mean a thing. If your GP loses your $500,000 nest egg, that's going to impact the future of their business. They're going to do everything they can not to lose your $500,000 nest egg. Not the same when you're investing in Wall Street. And you're also getting returns, right? You're getting quarterly payouts, monthly payments, semi-annual payouts, whatever it is in the deal you're in, you're getting payouts. You're getting money on your capital. Now, we talked about investment, and I just said that's something that pays you to own it. There's another aspect that you need to be cognizant of. You want to put it into something that's going to preserve your capital too. I mean, just because you're in a piece of real estate or just because you're in a business doesn't mean it's going to be a good investment. I'm not saying investment good, speculation bad. Investments go bad just like speculations go bad. But understand the difference is one is a pure bet. And there's a lot of professional gamblers out there that make a lot of money. But for goodness sake, don't call yourself an investor if you're a speculator. And part of what we do in the book is explain the difference between investing and speculation. We say, hey, whatever you want to do, that's up to you. Just know what you're doing, know the pros and cons of what you're doing.
How do we break away from Wall Street, right? Speak to that individual that's listening and said, hey, I'm guilty. I have, everything in that 401k or attached to Wall Street somehow. What does that look like to change that mindset, right?
Well, let's talk about 401k. What does that mean? That's a section of the Internal Revenue Code, section 401k. K is part of 401. 401 has A, B, C, D, E, F, G, right? What about section 401A? What about that section that allows you to be in complete and total control of your funds? A qualified retirement plan. It's exactly the same as a 401k in every single way. All of the bankruptcy protections, all of that protected against creditors, but you get to put your money wherever you want. Now, you can't buy a Ferrari with your retirement funds. Same rules apply. It's a retirement account. You can't buy your personal home with your 401a, qualified retirement plan, but you can buy real estate. You can buy precious metals. You can invest in businesses. You can lend money. You could become a banker, so to speak. And you could also speculate in the Wall Street market. You could also buy Bitcoin, God forbid, if that's what you want to do. How come nobody tells you about that? How come MSNBC isn't screaming from the rooftops, hey, everybody, get your money out of 401k where they control your money and put it into a 401a where you control your money? How come nobody's screaming that? Because they want your money. Think about what a 401k plan is. It's a subscription service. Every month, Wall Street is pulling money out of your paycheck and putting it into the things that are going to make them money. Now, you're hoping you're going to make money, and many people do, but they're definitely making money off of that subscription service. I tell you what, at least with my Netflix subscription, I get to watch movies. With my 401k subscription, all I get is a hope that my money doesn't go away and a hope that it's still there someday when I need it. Why not pull your money out of that rigged system and set up your own retirement plan?
So 401a, how would they go about that? Is that something their employer needs to be a part of, or is that something they can do on their own?
No, you could do it on your own. Look it up. Damian Lupo is a guy that has a good book on the topic. EQRP is, maybe I have it on my shelf right here. I don't think so.
Damian's been on the show a few times. I know Damian, and no doubt about it, a qualified retirement plan, right?
Yeah. So there's books. Look it up.
Awesome. Well, speak to just being a strategic investor, like obviously the title of the book talks about, but I know there's a mindset and a team thinking that goes into that. Speak to that a little bit, because I think often we can feel like it's so overwhelming to think outside of the norm, right? That 401k, it can be pretty overwhelming. So we just kind of just put it in there and forget about it, right? That's the easy thing to do. How do we think differently about this? And even that team thinking, I like that.
Well, strategic planning. Let's juxtapose the word tactical planning. So what does strategic mean versus tactical? Tactical are the specific things you do. I invest $5,000 into that thing. That's a tactic. And you have tactics to accomplish your goals. Your goals, the greater picture, that's your strategy. So when we're talking about strategic planning and investing for individuals, what we're trying to figure out is, what is the lifestyle that I want to live? And by the way, there's no right answer. You pick your lifestyle. You may be absolutely happy on $100,000 a year lifestyle. If you could have $100,000 of income coming in passively, even better, you are happy. You don't want to be a billionaire. Maybe you want to go for a $20 million a year lifestyle or a $40,000 a year lifestyle. First, you have to determine who you are, what makes you happy, what stresses you out, what do you not want to be a part of. Once you have that figured out, now you have to think, what's that going to cost me? Once you decide, cost me in terms of effort in putting this together. So there's a few things that come in. You obviously have to figure out where this income streams are going to come from. And initially, it's going to come through some form of job, right? So you're going to make income, and then you're going to have to deploy your income out into the world. And you're going to have to learn about the alternative investments, not just the 401k plan. But that's the tactics of it. When we're talking strategically, remember, what we want to do is not only deploy our capital to generate income, we also want to preserve our capital. So this is more than just investing. It's about estate planning. What happens, God forbid, you pass away? What happens to your family? What happens, God forbid, you're incapacitated? Who takes care of your stuff? Who manages your stuff? Who takes care of you? Who takes care of your children? Do you want a court deciding all of those things, or do you want it laid out? So estate planning is an important part of your strategic plan. Asset protection planning is an important part of your plan. If you put all your eggs in a basket under your name, there's predators out there, man. The government wants its slice of everything you own. And there's predators out there that want to suck your blood and eat your bones. So you've got to have protections in place, and that's entity structuring, right? So there's trusts, there's LLCs, there's corporations, S corps. So this is why investing strategically is a team sport. You have to have estate planning in place. You have to have asset protection planning in place. These are the domains of experts. These are the domains of people that do this all day, every day. It's not something that you're going to go buy a book and now create your estate plan. It's doable. I would recommend against it. Spend the money and have it done professionally. Same thing when it comes to investing. Let's talk about syndication. This is what your audience is primarily interested in. And this is also something that I'm interested in. You want to be sure that your investing is in entities that are protected against lawsuits primarily. You want to make sure that your businesses are layered within entities that protect the structure. I own a flower shop and I own the building that my flower shop is in. Someone slips and falls in the flower shop. They can take the income stream from the business and they can take the building because I had it all in one basket. Why not layer that? Why not have an LLC that owns my building and have an LLC that owns my business and have my business rent the space from my own LLC? So when they slip and fall, yes, maybe they can attach the income stream from my business, but they can't get to the building. It's isolated. So when we're talking about strategic planning, we're talking about the big picture, experts in terms of investing. How many people are going to be an expert in multifamily investing, mobile home park investing, resort investing, gold? You're not going to be an expert in everything. So you're going to team up with people. And here's where going to conferences is big. Here's where reading is big. Here's where podcast is big. Here's where growing your network. Remember, it's a team sport. What are the other people that are interested in doing the things that you're doing, in investing in the things that you're doing? Where do they go? Who do they listen to? Who do they hang out with? What do they attend? Get to know those people that are like you. You may be here, they may be here. So what? People tend to be very gracious if you're sincere and not abusive with your requests on their time. Go learn. Get yourself in the milieu of what's going on in the investing world, and then pick the experts that you feel comfortable with to place your capital with, and let them do the heavy lifting. They're the general partners. They're the operators. They're the experts. You're the limited partner that supplies the capital.
No doubt. We need a team. You hit so many things there, but just the thought around strategic planning is so important, right? Earlier, the better that you do it too, right? You don't know when you're going to be incapacitated or, unfortunately pass away, right? We do know it's going to happen, but we don't know when. And man, I like to, you said, do you want someone else deciding what happens to you after you're incapacitated, or, with your business or for your family? And so I just think it's a great wake up call that, man, you got to do some planning, and even the stress on spend a little money and have it done correctly. The last thing you want is to think you have it done correctly and then figure out, oh, no, like you said, we did have the business and the building in the same entity. We didn't think through that, right? We didn't hire that expert. We didn't spend a few hundred or even few thousand dollars to save thousands, right, later on. But really, too, just the peace of mind, I think, too, right? Knowing that we've done it correctly.
And let's talk about life insurance, for example, and how that can be a part of your investing. There's a product called whole life insurance. There's books on it. One I recommend is Be Your Own Banker by Nelson Nash. To get into the details is too much, but understand that you can buy a life insurance product and have your family covered for, let's say, $500,000, and that premium might cost you, I don't know, $700-800 a month. Remember, the first day you pay your first premium, we're making this up, of $700, if you die the next day, bang, your family gets $500,000. How long is it going to take you to save $500,000? Now, for some, it'll take a few months, but for most working people, it's going to take you a very long time to save $500,000. You can have that backstop for your family instantly for relatively little money. Now, with that same type of policy, you can have what's called paid up additions. So you could put excess money in above the premium amount, and that's building cash value. And then after a period, right? Rome wasn't built in a day. You're not going to have a big pot of money to draw on in a year or 2 years. But after some time, you're going to have a big pool of cash value that, guess what you're allowed to do with? You're allowed to borrow against it from the life insurance company. By the way, no qualification, no approval, no scrutiny. It's your money you're borrowing against. So you're going to put in a request, hey, I want to take $50,000 out of my paid up additions. And within 10 days in the mail, you'll have a check for $50,000. You will pay them interest, whatever the rate on your policy is. Let's say it's 4%, 5%. Probably in the future, it'll be higher. It goes with market rates, right? But it's locked in whenever you get your policy. Now, here's what's interesting. You're not borrowing $50,000 out of your paid up additions. When you have money in your insurance policy, they're paying you interest on that money every year. So if you pulled $50,000 out of your money, you'd earn less interest the next year. Your pool of money, that's not what's happening. Your $50,000 stays there. You're borrowing the insurance company's money. So you're still earning interest on that $50,000 that you just borrowed $50,000. Many times there's a wash there or a very small effective interest rate that you're paying when you do that. And now guess what you can do with that money? An opportunity comes up. You can go buy a rental property. You can invest in a limited partnership. Did the HR lady tell you about that? Did the HR lady tell you about that?
Not read that book, right? Or your book, to say the least.
Did MSNBC tell you that?
That's right.
None of these financial places that you're paying deep, deep attention to are interested in liberating you from them.
Yeah.
They want you beholden to them. I want you to be free.
No doubt. It's interesting. We've had a few people on that talked about the bank on yourself and some of that. And the Be Your Own Banker book, we'll link to that as well, that you recommended. It's an interesting philosophy. I've had a number of investors ask me about that scenario. How do you do that? Is it legit? Is it, is it all made up? Is it something we should look into?
I used money from my whole life policy to fund my master's degree. That's how I paid the tuition. Rather than taking a student loan or rather than taking cash, my effective rate was 1.5%. And I paid that back very quickly. But the point is, you can buy cars. Look, let's say you're going to take an auto loan and the interest rate is, 7%. I don't know what auto loans are. And what if your rate to pay back the money is 4%? You borrow out of your whole life policy. So you borrow the money for the car and you pay cash. Had you financed it, the rate would have been 6%. You're only paying 4% back. What if you paid yourself back 6%, the equivalent rate as if you had borrowed for the auto? Now you're making a 2% spread. You're actually making the spread that the bank would have made. Be your own banker. Finance all of your own purchases and pay the interest back to yourself. And now that pool of cash is growing bigger, 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 bigger.
All right, John. A few final questions, though. I want the listeners to think about the strategic plan you're laying out, and no doubt you need some experts on your side to even think through the estate planning and even be your own banker. I just think there's been a number of people, like Nelson Nash, that have explained this, and we need to. Man, it's something you got to look into because it could be so beneficial potentially for you. But I want to ask you, with the strategic planning, even your thoughts right now on investing over the next, let's say 6, 12, 18 months, what you're thinking about the, real estate market and how it's informing, your actions as far as investing.
Ooh, first of all, I want to say this is a very personal question. I don't mean personal, you're intruding. I mean, to the individual. This is a very personal, specific question that is based on that person's life. So for me, as the guy who went through 08, as the guy who lost properties in foreclosure, as the guy who been there, done that, and is in a very different mental place today than I was back then. I am in a position of hoarding cash and watching. I think there's a very good chance that the economy will be much worse a year from now. They talk about but wait a minute, the employment outlook is so good. If you look at those numbers, what you see is, since 2021, roughly 360,000 high-tech jobs, layoffs. These are the best jobs in the country. Amazon, Google, all of them. Microsoft,
Facebook.
They're laying off people. And they're being replaced with bartender jobs. And here's another thing you don't know. A full-time, $150,000 a year high-tech job goes away. A part-time fast food job comes online. They say, that's a net wash. Lost one job, gained one job. Really? That's a net wash? So this whole nonsense about the employment picture being fine, I don't buy. Look at something called shadowstats.com. Shadow Stats uses the criteria that was used back in the 1980s that the government used to figure things like inflation and unemployment. So every time the government doesn't like the numbers, the way things are panning out, they change the way they count, and all of a sudden things look better.
Blows my mind a little bit that's okay.
If you shadow stat, which are the numbers I look at, inflation is 15% right now, not 8 or 9 or 7, whatever they're saying it is this week. So I'm in a position of, I don't know. Look, I recently cashed out of a LP, limited partnership deal that I was in. This was a land development limited partnership that was paying me 20% returns like clockwork. Very good. However, I'm thinking if this market crashes, new homes, what is land development for? New home construction. New home construction is going to tank. By the way, I'm seeing 68%, I think was the number, decline in traffic in new home subdivisions. Sales are way down in new home subdivisions. They're cutting prices to move their inventory. I'm thinking, I probably don't want to have my money betting on near-term future of new homes, but I think there may be a real big opportunity on used homes if the market crashes. Look, in my area here, back in 09, 10, there were vacant houses everywhere. You could pick up 3-bedroom, 2-bath houses for $130,000 that are $400,000 today. I'm not saying things will go back to that, but I think there may be an opportunity to pick up assets at much lower prices in the near future. So I took a portion of that money and I put it into cash, and I took another portion of that money and I put it into a Kilo Gold Bar. That Kilo Gold Bar is up $5,000 since I bought it 2 months ago. Let me say something about gold and silver. It's not an investment. Now, a lot of people think it's an investment. It isn't. It's insurance. Gold and silver is a hedge against calamity. Look, the dollar's a piece of paper. It's a very good piece of paper. It's the world currency piece of paper. It's probably not going to go away tomorrow, but it could. There could be a day, especially if you look at the BRICS and what Russia and China and Saudi, and they're trying to change the way oil has been traded in what's called petrodollars. They're trying to get away from the US dollar. So there are many forces on the planet trying to do away with the dollar as the primary reserve currency. And that'll take a decade or more to happen. But the point is, it's in the works. So there could be a day when nobody wants the dollar. Do you really think there's going to be a day that you walk up to someone with a gold bar and say, hey, man, let me get some whatever? And they say, nah, we don't take gold. We don't take silver. So what gold and silver are, is there a hedge against calamity? Should you put all your money into it? No. Should you put how much? I don't know. That's up to you. But the point is, you probably should have a little pile of gold and silver sitting somewhere safe, just in case. So that's what gold and silver is.
Gold and silver have been a currency or a type of currency for thousands and thousands of years. It's not going away. I've heard so many people say, hey, you need to have some. I've still not done it yet myself.
You got to have some, Whitney. It's, first of all, it's pretty. It's pretty. You look at it and it's like, ooh, you pick up a quarter and you drop it and it's like, ding, you can tell it's garbage. You drop a silver coin, bing.
Yeah.
And it's heavy. It's beautiful.
John, tell us how you like to give back.
Oh, my wife and I are solid Christ-believing Christians, and we definitely believe that everything we have is a gift. I'm going to start crying. So we are very conscious about stewarding what we have. So we do a few things. We have some organizations We have an organization locally called Gator Wilderness Camp that we support monthly. They help at-risk boys, youth. It's a 18-month program, and it gets them thinking right, responsibility, self-reliance, respect, teamwork. It's a wonderful program. We also, there's an organization called Selah Freedom, which my wife and I support monthly, and they are in the space of human trafficking, women that are involved in human trafficking, and they have safe houses and things like that. We support them on a monthly basis. There's an organization called Pacific Justice Institute that we support monthly, and that is an attorney, a legal organization that supports pro bono, supports Christian businesses and churches that are facing legal challenges because of their faith-based beliefs. We support them every month. There's a local outfit called City Commit that we support monthly, which is a Christian group that seeks to build strong men. The belief being that if you build strong men, you build strong families. You build strong families, you build strong communities. You build strong communities, you build strong nations. So City Commit is an organization that I'm involved in. And then lastly, my wife and I give a $10,000 scholarship to one of my alma maters, Florida International University. I sit on the Hollow School of Real Estate. It's called the Real Estate Council. It's a little advisory committee for the real estate school. And we give a $10,000 scholarship and teaching award every year. It's split 50-50. $5,000 goes to a graduate of the Masters in International Real Estate program, and $5,000 goes to a teaching award for the best professors in the programs. And then that's the formal locked in every month, every year, and then miscellaneous things throughout the year that we see a need that we'll get involved in. But that's a very big part of what we do.
I'm grateful for your focus on giving back as well. And just even that you can name those things, it's like you're focused on those things, right? You're seeing those things and thinking about them, praying about them. So I just appreciate that, and your focus on giving back, and even giving back to us today, helping us to think, strategically, right? With our investments. It's so important. The earlier, the better. I just can't stress that enough either, that you're taking some of this to heart, what John laid out today. So John, thank you again for your time. Tell the listeners how they can get in touch with you and learn more about you and your book.
You can get the book on Amazon, Barnes & Noble, all of those places. You can also get it on my website, wealthloop.com, wealthloop.com. If you go there, you'll see the little store, and you can order the book. And the difference between Amazon and Barnes & Noble is you'll get a 10% discount if you buy it from my site. And I'll also sign it and give you a personal message. Of course, the shipping is free. So you can get the book on the website or wherever you get your books. And really, that's my only product. I don't have courses. I'm not trying to get you to a webinar, coaching programs. I'm just the book. And I wrote the book because I thought it was needed. People need to get out of the Wall Street rat race and really start taking charge of their financial futures, because I see hard times coming. I hope to God I'm wrong, but I see hard times coming, and I see so many people are going to get hurt because they've bought into this lie that investing in Wall Street is the way to financial freedom. And I just want to help as many people as I can to avoid a possible dire circumstances in the future.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.